Folks, let me tell you something. The United States has been putting the squeeze on Saudi Arabia, really trying to push them away from China and those BRICS countries. Why? Because there's a big worry about all this high-tech, critical infrastructure and data getting into Chinese hands. They think it's going to hurt our national security and economic interests, big time. But guess what? Saudi Arabia isn't just sitting around. Oh no, they're making moves, big moves. They've gone ahead and signed a whopping $50 billion in agreements with Chinese financial heavyweights. That's a lot of dough. This isn't just business as usual, it's a big statement. They're saying loud and clear, they want to beef up ties with China. This whole shindig is part of a bigger plan Saudi Arabia's got, called Vision 2030. They're looking to shake things up, not just stick to oil, but to spread their bets and make their economy tough, diversified, and ready for the future. And these deals, they're all about pumping money back and forth, getting deep into each other's pockets with both debt and equity investments. It's a two-way street that's getting busier by the day. Just last year, investments from the Gulf into China jumped, can you believe it, from a mere $100 million to a giant leap to $2.3 billion. That's not just growth, that's an explosion. And Saudi Aramco, they're not just dabbling, they're diving deep. They snagged a 10% stake in one of China's big petrochemical players, Rongsheng Petrochemical, dishing out $3.6 billion and locking down a massive oil supply deal while they're at it. But there's more. They're also throwing down a cool $12.2 billion on a new refinery and chemical plant in China, set to be a game changer for them by 2026. That's not just investment, that's planting a flag. Now, our folks in Washington, like Secretary Blinken, they say they're not forcing anyone to choose sides. But let's be real, the actions speak for themselves. Saudi Arabia is choosing its partners, and it looks like they've got their eyes set on China. Let me paint you a picture of how things are shaking up in the global market. Last year, folks, the trade between China and Saudi Arabia hit a real milestone. It soared to about $24.3 billion in just the first 3 months. That's not chump change. We're talking big oil money, with Saudi's crude pouring into China to the tune of $13.7 billion, while the Chinese shipped over $10.7 billion worth of electronics back to the Saudis. By the end of the year, the total tally from Saudi to China was a staggering $64.3 billion. Now, fast forward to 2024 and the numbers keep climbing. China's exports to Saudi Arabia up by 11.8% by May. Saudi's imports, they're up too by a modest 3.51%. What does this mean? It means their economic dance is getting tighter and more choreographed by the day, particularly in tech, logistics, and manufacturing. And get this, Saudi Arabia isn't just stopping there. They're ramping up their oil supplies to feed China's hungry new and expanding refineries. But hold on, let's pause for a quick second. Before we dive deeper into how Saudi Arabia and China are tossing the US dollar aside like last week's news, do me a solid. If you like what you're hearing, smash that like button, drop us a comment, share your thoughts. It really helps us out, folks. All right, back to the scoop. So, here's where it gets even juicier. Saudi Arabia and China, they've decided they're tired of the dollar calling the shots. They've set up a massive $7 billion currency swap deal. Imagine that. Trading in their own money, yuan for rials, without the dollar middleman. This deal's set to run for 3 years, and it might even get extended. We're talking about 50 billion yuans, or 26 billion reals, swapping hands directly. Why does this matter? Because it's a game changer. It's all part of this big push to kick the US dollar off its throne in global trade. China's been all about pushing the yuan onto the world stage, and teaming up with Saudi Arabia, that's a power move. Saudi's the king of oil, China's the king of consumption. Together, they're redefining how global trade plays out. Formal diplomatic relations between Saudi Arabia and China were established on July 21, 1990, signifying a crucial evolution in Saudi Arabia's foreign policy. This strategic maneuver enabled Saudi Arabia to widen its international alliances, branching out from its conventional Western affiliations. During the initial years of the 1990s, trade interactions between the two nations were modest, primarily centered around basic commodities. However, by the early 2000s, the scope of bilateral trade had broadened significantly. In 2004, the trade volume between Saudi Arabia and China was recorded at approximately $3 billion. By 2008, this figure had dramatically increased to $25.4 billion, marking an impressive compound annual growth rate of nearly 40%. The burgeoning relationship was further propelled by China's escalating demand for energy throughout the 2010s, positioning China as Saudi Arabia's largest trading partner by 2015. By 2018, bilateral trade had surged to $42.3 billion and continued to expand, reaching a remarkable $87.3 billion in 2021. The first quarter of 2023 alone saw bilateral trade hit $24.3 billion, with Saudi exports to China totaling $13.7 billion and Chinese imports at $10.7 billion. A cornerstone of this flourishing partnership remains the energy sector, where Saudi Aramco has initiated multiple joint ventures with Chinese firms, including significant investments in refineries and petrochemical plants. For example, in 2019, Saudi Aramco committed to a $1 billion venture to construct a refining and petrochemical complex in China. Saudi Arabia's involvement in China's Belt and Road Initiative, BRI, underscores the deep-seated integration between the two countries, with substantial Chinese investments funneled into Saudi infrastructure, logistics, and manufacturing sectors. A testament to this deepening economic bond was the Red Sea Industrial Aluminium Company's $1.1 billion investment in Saudi Arabia. The political rapport between the nations has also been marked by high-level engagements, a notable instance being Chinese President Xi Jinping's visit to Saudi Arabia in December 2022. This visit was particularly significant, culminating in the signing of 35 agreements valued collectively at $50 billion. These agreements spanned a wide range of sectors, including energy, infrastructure, and technology, further cementing the robust ties between the two countries and heralding a new era of strategic cooperation. China's ascendancy in regional politics is becoming increasingly conspicuous, notably exemplified by its role in facilitating the diplomatic thaw between Saudi Arabia and Iran in 2023. This mediation effort not only highlighted China's growing clout in the Middle East, but also established it as a pivotal diplomatic force in a region traditionally dominated by Western influence. Parallel to these diplomatic strides, cultural ties between China and Saudi Arabia have been strengthening. A significant number of Saudi students are pursuing their education in China, underscoring a robust educational exchange that benefits both nations. Moreover, Saudi Arabia's Vision 2030, which seeks to diversify the economy and invigorate the tourism sector, includes targeted initiatives to attract Chinese tourists, reflecting a mutual interest in enhancing people-to-people connections. In the realms of media and technology, the partnership is particularly vibrant. Chinese tech giants, notably Huawei, are instrumental in driving Saudi Arabia's digital transformation, aligning with the kingdom's ambitious plans to modernize its economy and infrastructure. A seismic shift in global economic dynamics was marked by the termination of the petrodollar agreement between the United States and Saudi Arabia on June 9, 2024. Initiated in 1974, this agreement mandated that Saudi Arabia sell its oil exclusively in U.S. dollars and reinvest the surplus revenues in U.S. Treasury bonds, in return for American military support and economic assistance. This arrangement was pivotal in securing the U.S. dollar's hegemony as the world's leading reserve currency. With the conclusion of this agreement, Saudi Arabia has gained the autonomy to conduct oil transactions in a variety of currencies, such as the Chinese yuan, euros, yen, and even digital currencies like Bitcoin. This development is poised to diminish the U.S. dollar's dominance in international markets. As oil trades in alternative currencies become more commonplace, the global demand for the dollar may wane, potentially triggering higher inflation, rising interest rates, and volatility in the U.S. bond market. This transition reflects broader global trends, where emerging economies are increasing their influence and the world is gradually shifting towards alternative energy sources, reducing its dependence on oil. Moreover, Saudi Arabia's active participation in the BRICS group and other international coalitions indicates a strategic pivot towards diversifying its economic and geopolitical alliances beyond its traditional Western partners. suggesting a potential realignment of global power structures. Thank you for watching. We value your time and engagement. If you found this video insightful, please show your support by hitting the like button and subscribing to our channel. Stay connected and informed by joining our community. For more thought-provoking content, feel free to watch another video now displayed on your screen. Your participation and feedback are immensely appreciated.